Alrighty, everybody, what is going on? Welcome back to another CYPRX video breakdown. In today's video, we're going to be taking a look at some ongoing developments in the DeFi ecosystem that a lot of people are ignoring. We're really going to fixate our attention on two specific projects that I am extremely bullish on in the crypto ecosystem that I think are going to perform excessively well in the future as we start to transition into this utility super cycle where we're really starting to see assets that have underlying value and real world utility perform relatively well compared to other assets that don't or that aren't being adopted by financial institutions at a rapid pace. And so hopefully today's video breakdown, which is going to be a lengthy one, gives you guys some insights into those projects and what it is that I'm paying attention to on the back end via the research that we do here at CYPRX. We're going to talk about some call outs that we've made, some price appreciation, some discounted opportunities that exist in the now on these projects. Again, none of this is financial advice. Always do your own personal research. So starting off here with this post from Ripple, September 22nd, 2025, none of what is happening right now in the market is by coincidence. It is all by design. So we take a look, September 22nd, 2025. Ripple puts out this report on their website, the next phase of institutional DeFi on the XRPL. And in previous video breakdowns, we discussed and talked about this thoroughly. We read some of it, talked about utilizing digital assets as collateral, this native lending protocol that is going to be launching later this year on the XRPL. And now institutions are already lined up to use this protocol on the XRPL because of its modular design that ensures the new features can be iterated on quickly as market needs evolve, where lenders are going to be able to earn yield on otherwise idle digital assets. With KYC and AML standards built in, no financial institution will turn down low-cost capital if it can be sourced within these parameters. And so we talked about this in previous video breakdowns, and here you can even see it says, the XRPL community has moved beyond exploration and is now prototyping ZKP integrations with R&D and compliance teams alongside partners such as Hidden Road. The first application is already in development. Confidential multi-purpose tokens, or MPTs, scheduled for launch in Q1 2026. So these are ongoing developments. These tokens will support privacy, preserving collateral management, that's important, a critical requirement for institutional adoption of tokenized finance, allowing tokenized collateral to be deployed in lending or settlement workflows while keeping terms and positions confidential. This is huge, considering what was announced a couple of months ago, July 6, 2025, via Brad Garlinghouse, and what is now being announced in most recent times. This is back from July 6, 2025. Like I said, none of this is by accident. Ripple CEO Brad Garlinghouse announced at a recent press conference in Singapore at the Ripple stablecoin RLUSD will now be accepted as collateral across all services provided by prime brokerage firm Hidden Road. And if we head over to YouTube and you type in Paris Blockchain Week 2025, the only Paris blockchain, like I said, this is not coincidence, y'all. Call me a conspiracy theorist if you want, but the only video from Paris Blockchain Week from the 9th through the 10th of April 2025 that is on the Paris Blockchain Week YouTube, where you can watch the panel discussions that existed at this summit, is the one of Monica Long saying that this acquisition of Hidden Road is going to blast DeFi into the stratosphere.
Excited. I think just a few minutes ago, our announcement crossed the wire. So I'm really excited to share with you a deal we've been working on for some time. So Ripple is acquiring Hidden Road, which is a prime broker. They're a very high growth prime broker, one of the largest as the non-bank prime brokers. And this is a big deal. It's $1.225 billion.
What does it mean?
Thank you.
What does it mean for Ripple's business? Because you've been on a path to really diversify the business beyond kind of how you started in payments, and there's custody, stable coins now. And so what does this add to the Ripple business?
It's all coming together. So we've talked for a long while about institutional decentralized finance. Many of us here talk about institutions coming into the world of blockchain and DeFi. And this is going to blast that into a new milestone, kind of a new stratosphere.
Now, again, I don't think that that's a coincidence, considering that Brad Garlinghouse had said in July, a few months after that announcement, that they are going to be able to utilize RLUSD and accept it as collateral across all services provided by prime brokerage firm Hidden Road. And then just yesterday, what did Ripple release? This whole entire article in depth on institutional DeFi scaling on the XRPL, right? Now, if we fast forward to today, as of time of recording, it is September 23rd, 2025. What do we see? 2 hours ago, it was announced. The CFTC is announcing its exploration and the use of stablecoins as tokenized collateral in the US derivatives markets, marking a significant step towards integrating digital assets into TradFi infrastructure. Carolina D. Pham, the acting chair of the CFTC, outlined the initiative as part of a broader effort to modernize derivatives trading through blockchain technology and tokenized assets. This is such a granular announcement. And like I said, these DeFi developments on the XRPL are going to continuously scale. Institutions will want to earn yield on idle digital assets, including stablecoins and assets like XRP. And all of that for the first time is happening in the very moment. We'll get to those announcements here in just a second. Now, those are not the only announcements that are substantial in recent times. Today, Securitize also announced that they are partnering with Ripple to enable RLUSD transfers for BlackRock's BUIDL fund and VanEck's VBIL tokenized funds. Now, we're going to jump into this a little bit more in detail. First, I want you guys to listen to Carlos Domingo, the CEO and co-founder of Securitize, go on to talk about this entire partnership.
What's the story behind this, and why is this important for Securitize?
One of the issues with capital markets is that the dollar, the rails for the dollars and the rails for the securities are disconnected. So one of the huge advantages of tokenization is that you bring within the same ledger technology tokenized securities and tokenized dollars. So for us being the largest issuer of tokenized securities, we need to partner with the largest issuers of tokenized dollars, because that's how we bring the two worlds together and provide liquidity for our assets, which is hugely important to make them, more useful for people on chain. Being able to then compose them better with DeFi that needs liquidation, use them as collateral for trading. In case the collateral needs to get liquidated, you need to exit into stable coins, etc. So, as you know, Ripple, one of the largest companies in the space, launched its own stable coin. I believe it was like 6 months ago or something like that, like pretty recently.
Yep.
But it's been pretty remarkable how big it has become so quickly. So obviously, Ripple is a company very familiar to us. I don't know if people are aware of it, but they invested in our company in 2018, and we've always been, talking to them. But more recently, I think Ripple has started doing some movements to get closer to our space. They, as you know, launched a custody product. Now they bought a prime broker, and now they launched a stable coin. So that led to the discussions of why don't we use RLUSD as one of the liquidity layers for RWAs, and then the announcement today that we're going to start that with the two tokenized treasury funds that we have, BUIDL from BlackRock and VBIL from VanEck. Well, they will have instant on-chain liquidity options into RLUSD.
Instant on-chain liquidity options via RLUSD. Now, the important part of this is the project behind all of this. That's what we're going to really fixate our attention on. So, albeit this does involve Ripple and RLUSD, I want you guys to take a closer look at this announcement. This is kind of what we're going to dabble into via one of the projects that I'm going to bring to everybody's attention that we have been pretty adamant about here at CYPRX to try to tell you guys, hey, wake up. This is a project that nobody's paying attention to, but has done massive things in the space for DeFi and with financial institutions. So BUIDL and VBIL, two of the largest tokenized treasury funds, gain 24/7 instant exchange via RLUSD, which is going to be powered by Securitize. Now, RLUSD's Ripple's fully reserved stablecoin backed 1-to-1 by the US dollar deposits and short-term treasuries issued under a NYDFS trust charter. With $740 million plus in circulation, RLUSD is purpose-built for institutional use in DeFi composability. Qualified fund holders via Securitize can swap BUIDL for RLUSD or VBIL for RLUSD. However, every exchange, it says right here, is verified by Redstone oracles. Wow. They threw that in there in the midst, so under the radar, I don't think people understand how massive this is. So if we come over here to this post where I said to you guys, don't sleep on Redstone. Yes, the headline says Ripple plus Securitize plus BlackRock plus VanEck, but if you look deeper, every BUIDL, RLUSD, and VBIL swap is verified by Redstone oracles for a $1 parity. That means the entire automated trust layer behind the $740 million plus institutional stablecoin flow will rely on Redstone's Oracle infrastructure to keep everything rock solid and composable with DeFi and CeFi. RLUSD swaps are instant, on-chain, and fully regulated, and Redstone's price feeds will keep them pegged. DeFi plus TradFi bridges. This is how continuous yield exposure, intraday transfers, and simplified treasury management stays seamless. Redstone is not necessarily in the headline, but it is critical to the rails making this integration real. And I wonder why they didn't broadcast this whole notion that Redstone is going to be the Oracle provider behind this. Again, take into consideration, you should be paying attention to the fine details, and Redstone is mentioned right there in this announcement, albeit it's not in the headline announcement. It is right there. So we're going to dive into this a little bit deeper. I have the article here pulled up, September 23rd, 2025. Two key highlights of this is it goes on to say investors are going to be able to gain continuous exposure to RLUSD while preserving exposure to on-chain yield and a broader range of DeFi strategies, further driving utility. That is important. The terminology DeFi strategies driving further utility, because we've been advocates of screaming at the top of our lungs, DeFi brings utility to said digital assets, and that is coming. It is coming very fast at a rapid pace that a lot of people are being caught off guard by it. This is why we've tried to emphasize educating yourself on DeFi, learning DeFi strategies, how to loop, how to earn yield, how to lend, how to borrow, all these things. Flexibility, interoperability for tokenized assets, making RLUSD available as an exchange option for tokenized funds is a natural next step as we continue to bridge TradFi and crypto, said Jack McDonald. If you guys watched our previous video breakdown, what did Jack McDonald say? SVP of stablecoins at Ripple. He specifically mentioned that yield is what's going to bring these institutions and allow them to broaden their risk horizon. RLUSD is for institutional use, offering regulatory clarity, stability, and real utility. Now, if we come over here, because in the private CYPRX community, we had been notifying people of Redstone back when it was trading at 27 cents. But at the beginning of today's video, I mentioned that we're starting to see real utility pick up pace, and that lead to price appreciation of said digital assets. Well, let me show you guys. If we go back to the September 4th announcement where Redstone acquires the Credora network, the leading DeFi ratings provider, changing something for the first time in history for the status quo in DeFi risk management. For the first time ever, real-time pricing and institutional grade risk ratings are all now under one roof with Redstone and this acquisition of Credora network. We'll get into that in just a second. But if you take this fundamental release and you head over to the Redstone charts and you copy it and you paste this announcement from September 4th, 2025 on the Redstone charts. Mind you, in our private community, we were letting people know that we were dollar cost averaging into red below 30 cents. So we were in the market way before this announcement, seeing the opportunity that Redstone delivers. However, shortly after that announcement, the day of, Redstone spiked from 35 cents per token to over $1 plus, ladies and gentlemen. And this, again, might be speculation on my behalf, but it is firmly because of this announcement and the real world use case that Redstone provides, and may have been some form of a test. A spike of liquidity going from 30 cents to $1.02 in one candlestick shows 110% that these utility digital assets, these utility projects are being used, and they're being used with enough momentum to drive price action higher. Now, recently, because of the market pullback that we've seen across all of crypto, we have seen the price pull back to about 52 cents, which I personally think is a really great entry for a long-term hold on this digital asset. Now, again, not financial advice. This is something that I'm just projecting for my own personal portfolio to continue to accumulate Redstone tokens under $1, not financial advice. However, us buying sub 30 cents paid off handsomely. I think us buying sub $1 is going to pay off handsomely as well. So recently we saw this announced. So we're going to get into a little bit of Redstone, we're going to read a couple of different pages from this DL research report. Redstone, the fastest growing blockchain oracle report, redefining stablecoin settlement. Now, albeit this is going to take us a little bit of time to read, I want you to again understand that this announcement that has everybody drooling out of the mouth, right? If you go and you look on Twitter, there were live Twitter spaces this morning on this announcement. Videos have already been made on this announcement. Securitize, Ripple enabling RLUSD for BlackRock and VanEck VBill tokenized funds, right? Nobody talked about Redstone. Here in the CYPRX community, we are going to pay attention to the fine details, the oracle provider for all of this to take place in a safe and efficient and effective manner. So coming over here to this document from DL Research, I'm going to read you guys pages 5 through 8, and I'm going to read you also pages 12 through 14. Reason being is because it's going to give you guys, those of you all who might not understand what Redstone is, a real thorough, detailed explanation of what it is, why it's important, and some of the recent announcements that they've made that have made history in the DeFi and crypto ecosystem. So again, you should be paying attention. Scrolling down here to page 5, it says, and this is directly from Marcin, the co-founder of Redstone, an oracle is not simply a price feed. It is the lens through which blockchain perceives reality. If that lens is distorted, the entire system misprices risk, liquidity, and opportunity. The blockchain oracle of the future must act less like a metronome and more like a nervous system, transmitting signals when they matter, in the exact place that they matter, and fast enough to trigger reflexes before damage occurs. That is the standard DeFi and on-chain finance ecosystem must demand if it is to scale into the financial system of the future. And that is exactly what Redstone provides. So how did Redstone become the fastest growing oracle? It's remarkable that Redstone achieved its first large-scale DeFi integration only at the start of 2023. So it's, of course, that not a lot of people know about it. It hasn't been around for too long. It's definitely not an OG dinosaur in this space, but one that you should 110% start to pay attention to. Fast forward 32 months later, and Redstone has become the second largest blockchain oracle provider, securing more than $9 billion across over 85 different DeFi applications, according to DeFi Llama data, making it the fastest growing oracle over the past 2 years. What specific aspects of Redstone's design enable this rapid conquest of the DeFi ecosystem? The systematic, professional, and hardworking team co-founded by Jacob W. and Marcin K., along with their well-executed product growth strategy built on flexibility, market adaptability, and rapid execution, represents one of the defining factors behind Redstone's success. However, technical excellence stands as Redstone's defining advantage. Its price feed service delivers market-leading security, proven by protecting major DeFi protocols, this is important, including Compound, Morpho, Athena, Spark, Venus, Securitize, Drift Institutional, and Camino. Beyond traditional price feeds, Redstone pioneered innovative feed types, fundamental price feeds sourced directly from smart contracts, real-world asset oracles, and Redstone Bolt, the fastest push oracle at sub 2.4 milliseconds. Redstone has emerged from the pressing need for oracle solutions during a period when infrastructure limitations severely constrained DeFi builders. The necessity drove Redstone's modular design, which directly addresses the blockchain industry's evolving demands for scalability and diverse price feed offerings. So Redstone is partnered with some of the largest DeFi protocols and institutions in this space. Yet again, it's one of those projects that nobody really pays attention to, which is what piqued our interest here at CYPRX. So now this goes on to say, this is the last page I'll read, but how does Redstone's modular framework compare to other industry leaders and oracles in this space like Chainlink and Pyth? Chainlink pioneered the oracle space and fundamentally ignited the DeFi ecosystem, delivering the technology that powered DeFi Summer in 2020. Its aggregator v3 push model and interface became the industry standard, with the majority of DeFi developers building on its widely adopted framework. However, Chainlink's monolithic architecture has become increasingly constraining. The platform requires expensive full network redeployments for each new system, limiting it to just 26 chains with zero non-EVM support after 5 years of operations. This capital-intensive, non-scalable infrastructure, I repeat, non-scalable infrastructure, creates economic sustainability challenges and prohibitively high costs for supporting innovation cycles. As a result, Chainlink has shifted from Oracle innovator to legacy maintainer, predominantly managing existing clients rather than pioneering new DeFi primitives alongside emerging teams. Pith, a pool oracle advocate, Pith Network pioneered the pool oracle model, bringing a fundamentally different approach to the oracle space that challenged Chainlink's push-based dominance. The platform achieved significant success by introducing cost-efficient, on-demand priced updates that only occur when users request them, helping foster greater innovation and fresh perspectives in the oracle ecosystem. However, Pith's architecture creates several constraints as well. Its cross-chain delivery depends entirely on Wormhole's messaging system, creating a single point of failure that has caused feed disruptions during consensus issues. The platform lacks push model support, making it incompatible with existing DeFi infrastructure predominantly built on Chainlink's aggregator v3 interface, forcing protocols to undergo costly migrations. Additionally, Pith's reliance on third-party data providers severely limits custom use cases and innovation, as new asset supports depend entirely on external providers, meeting arbitrary thresholds such as trading volume rather than protocol-specific needs. So, up comes Redstone, the push and pull blockchain oracle. As highlighted, there are currently two main approaches to oracles, push and pull models. However, providers often strongly defend their chosen methodology, claiming it to be the only viable solution for creating optimal oracle framework. That said, it is increasingly evident that a flexible and customizable approach is essential for success, as every team follows its unique path designing frameworks to implement and foster protocol growth. Redstone is the first modular blockchain oracle with infrastructure that is effectively blockchain and model ambivalent. Combining the strengths of traditional blockchain oracles, Redstone can deliver data in push or pull models, so both push and pull, as well as real-world asset or sub 2.4 milliseconds. Redstone bulk consumption models. Redstone can deliver any asset to any blockchain in a customized methodology with minimal resource expenditure, complemented by optimized infrastructure for computational efficiency and personalized customization at every implementation stage. Now, I know that that was a freaking mouthful. Trust me. Reading these documents is boring as heck, but this is one of those innovative technologies that is setting new standards in the industry, standards that should not be ignored, that will need to be met for institutions, organizations, retail investors alike, and protocol builders if they want to become successful in the future. Now, as we continue to scroll down here, this document is extremely educational and informational. Here we have Carlos Domingo himself, who again just announced and was talking on a panel discussion about their partnership with Ripple, Biddle, VanEck, so on and so forth. And all of this included Redstone. We chose Redstone for its flawless track record and ability to create bespoke integrations in its scalable modular design. Having Redstone as our primary, I repeat, our primary oracle allows us to not only transact with tokenized securities on chain, but also integrate them into existing DeFi infrastructure and develop entirely new DeFi primitives, marrying traditional finance and DeFi. And again, they chose Redstone. You cannot make this stuff up. Now to get into this Redstone and Credora partnership, defining DeFi strategies and asset ratings. Keep in mind, I just showed you guys how shortly after this announcement with Redstone and Credora, price went from 30 cents to about $1.02, which is a huge price gap. For years, DeFi and TradFi operated on different principles. One, open and fast. The other, regulated and structured, with risk frameworks at the heart of it. Now, those two worlds are converging. Redstone has acquired Credora, the leading DeFi native ratings platform. This creates the first oracle that delivers both real-time prices and DeFi strategy risk ratings. Protocols and users gain the tools to build safer and more transparent markets. The results are already visible. Markets on Morpho that have Credora by Redstone rating grow faster than ones lacking the rating. So in my personal opinion, this will become a new industry standard for any of these protocols that want to actually thrive in the future. The market impact is immediate. Redstone already secures over $9 billion in TVL across 110 different chains with zero downtime. Adding Credora's risk intelligence makes protocols safer, lending decisions smarter, and reduces information asymmetry for allocators. Through this integration of price and risk intelligence, Redstone is driving DeFi's transformation into a financial system capable of global scale. I will end it there on the Redstone note. So definitely don't ignore Redstone. Again, not financial advice. Just go out there and do your research. Now, there was another digital asset. I feel like I'm kind of pinched for time right now because this video is going on 30 minutes. There's another asset that I wanted to bring to everybody's attention, and that is the Apsis token, the native digital asset, or one of the native digital assets of the Enosis DEX. Here you guys can see Apsis price currently trading at $2,000 per Apsis token after this announcement by the Enosis DEX themselves, where they said, "We are thrilled to announce the upcoming launch of the Enosis loans, a friendly fork of Liquidity V2 by Liquidity Protocol deployed on the Flare network system. This marks a historic milestone in the DeFi landscape as the first ever collateralized debt position, or CDP, protocol to leverage FXRP as collateral to mint a stablecoin." Apsis has a limited supply of 15,000 tokens. So if you just go over here and you look at the Enosis DEX itself that has 105,000 followers, if every single follower, if these are real followers, purchased one Apsis token, the entire supply of Apsis would completely dry up. Take that into consideration. Also take into consideration that Apsis's all-time high is $165,000 per Apsis token. XRP holders are going to be able to use their assets as collateral in a CDP to mint a new stablecoin, enabling participation in DeFi applications such as lending, borrowing, and yield generation while still maintaining exposure to the underlying FXRP. This is a transformative step for XRP, which, due to the XRP ledger's lack of native smart contracts functionality, has historically been excluded from the broader DeFi ecosystem. The planned inclusion of FBTC will further extend this capability to Bitcoin, unlocking the potential of two of the most valuable cryptocurrencies representing trillions of dollars in market capitalization for DeFi use cases. Enosis loans build on the robust foundation of Liquidity V2, a leading CDP protocol on Ethereum known for its efficiency, low fees, and user-controlled interest rates. Down here, last but not least, it says, this expansion will position Enosis loans as a multi-asset CDP, allowing users to leverage a variety of high-value cryptocurrencies while maintaining the protocol's decentralized and trustless ethos. And if you see down here at the bottom, this is from September 19th, 2025. In the private CYPRX community, why it's so important to be a part of a community that actually pays attention to the small, fine details in the projects that nobody else pays attention to. Looking at the date, September 19th, 2025, you come over to our Discord and you can see here, I said to everybody in our private DeFi chat on Saturday, September 20th, the day after that announcement, do not sleep on Apsis below $2,000. And you can see here, I posted the breaking fundamental development on September 19th of this announcement from Enosis of how they are going to literally allow users to provide XRP posted as collateral, so on and so forth. And sure enough, days after, you go over to the Apsis charts, which you cannot track on TradingView. Over on CoinGecko, you look down here at the bottom on September 20th, Apsis's price was trading at roughly around $1,500 per token, and it is now up over 40%, trading around $2,100 per token at its recent peak, now currently trading at about $2,074. So these are two projects that we called out in the private CYPRX community in advance before price appreciation, or at least recent price appreciation, all because we are focused on utility-driven use cases and assets that are actually going to be utilized in this new DeFi ecosystem, this new decentralized finance world that we are headed into. So lock in. Now is the time to pay attention to detail. If you guys want any of these research insights, you guys have the CYPRX Discord. Hundreds of documented research, hundreds of panel discussions, hundreds of PDFs. It is probably the deepest research Discord on the face of the internet. We have global researchers always working around the clock, dropping hundreds of documents and fundamental breakdowns on a consistent daily and weekly basis. Tap in with us. Join into these insights and stop just paying attention to mainstream crypto projects. As you guys can see, projects that nobody is talking about are actually doing numbers right now. And these are projects that are being utilized for use case and value in the moment. So with all of this in mind, none of this is financial advice. If you guys want to join us in the private CYPRX community, you guys want access to all of these insights and these ongoing developments that we discuss and talk about, make sure you head over to cyprxtrading.com. We'd love to have you on the team. As always, many blessings to you guys. Be cognizant. Be aware out there. I will see you guys in the next video breakdown.